So this is a website I use called Worldometer. And this is Florida. What Worldometer does is scrapes data from every website at the state level. And each state has their own COVID page. So this is the United States, and I'll start with countries. So here we are with nearly 15 million people infected, 616,000 deaths. Sometimes we forget that almost 9 million people have recovered. So I know that gets overshadowed a bit, but believe it or not, even if you're over the age of 65, you have only 10% chance of having a fatalistic effect to this. I mean, you only have a 10% chance of dying if you get it over the age of 65. It is not a death sentence for someone who gets it, and that's why so many have recovered. What's happening early on was really exciting. See this chart here? This is the death chart and for the fatality chart. And you'll see that we had peaked and come down significantly. But then as of late, we've been stubbornly kind of stuck around 5,000 a day. And that's to a degree of what's happened in a few other countries. That's not a US problem, that's other countries. Here's the new case rate, and it's gone steadily higher. And the reason why is a few other countries that are having a difficult time with their fatality situation. I give the United States medical system some credit. We have significantly more cases than everybody else in the world, but in most cases, not on a ratio basis, much better death rate. So for example, the United States has 144,000 people that have passed away as of right now. Brazil, with about half the cases we have, 2.1 million, they have 80,000 deaths. So you can see, on a percentage basis, if you double that up, they're going to have more deaths than we did. When you roll up Europe, we're about 30% better than Europe. But notice how some of these other countries are really totaling up new cases and death rates as well, as you scroll down here. But let's just worry about the United States for a minute. When you look at the US, and I'm going to make this relatively quick, here we are at 4 million cases, 144,000 deaths. What the talk has been so much about is that our total case rate here continues to climb, and is pretty exceptional. Then our new case rate, where we had done a very good job of getting it down, where our worst days were in that 30,000 range, suddenly we hit this early June time period and just exploded all the way up to here. 74,000, almost 75,000, our worst day. Now, luckily, the last 3 days have been better. And as you can tell with this, it's all about trends. So the trend for the last few days is our friend. That's a good sign. We did have a period of time like Europe when we went from active cases became less active, meaning more people were getting better than getting sick. That did change. Now that's what we need to break again to get to where we can fully open up. But here's where the United States has done a very good job. Our death rate has been pretty much the same. See these numbers here, 700 down to 285. You look, we did spike a bit, so 900 down to, I guess, 465, and then 900. So you'll see in this chart here, we've gone up a bit in deaths, but nowhere near where we were. We had, roughly a few thousand people passing a day. So that continues to be a positive sign. And truth be told, when we think about that aspect of it, that the United States has done a fairly good job. Oh, I wanted to show you Florida. Let me show you Florida real quick, sorry. Has done a fairly good job of maintaining. Now, is that temporary? Perhaps. It might be temporary in that many of these people just entered the hospital in the last few weeks, and we'll have to find out whether or not this is going to be a permanent situation where they get sick and eventually die. As far as Florida goes, just looking at your Florida chart, you also have had a couple better days. So your worst day on new cases was back there on July the 12th, over 15,000, and you have been lower just about every single day, where today, and it's early, you're at 10,000 for today. However, your death rate, although it did spike from the very low numbers that you had in the 60s, it's up, I guess, about 120 was your worst day. Here's one of the things about this kind of data that's always a little interesting to me. Florida has, I believe your population is 20 million. I could have that wrong. I get it mixed up once in a while with the Carolinas. But if you think about on a percentage basis versus the amount of people that live in Florida, your daily death rate is tiny. I mean, it really is still very small. So on a percentage basis, yes, it looked like you went from 60 a day up to 112 or 150. It's a 100% increase, you could argue, depending on the day. But in pure numbers, it's really not that significant as of yet. So that's just something to think about. I can even show you Florida, and I can show you Arizona, where Arizona actually the last few days looks great. I won't bore you with more of that stuff unless you're interested, but certainly there is an aspect of it. So where do we go from here economically? How does this work? Let's assume that because of what's happening in Florida and these other states, we need to slow down our ability to reopen the economy. And we have these gauges called mobility gauges that actually track how often you're using Apple Map, Google Map, where you're spending your money. Are you spending it online? Are you spending it in retail? Are you going to restaurants? So that data is collected by these very large databases. And what we saw was we came off 100% decline in almost every single category, not obviously not food and gasoline, which were also down by the way, but just not as much. We came off in retail spending down 100%, to where in most cases, depending on the state, it was down as little as 50%, 30%, in some cases even 10%. Heck, we saw gasoline usage go back on a year-on-year basis to flat. We saw retail spending come back only down 30%. That's in physical purchase, down 30%. So what we saw was that a real bounce in the mobility. And then came this recent round of new cases. In the last few weeks here, the mobility trackers are tailing off. Now nowhere near where we were, but down about 5%. So everything's come off. TSA traffic had gone up to over 800,000 people a day going through airports in the United States, where it was 100,000 a day. So a massive increase. Now we went back down to about 650. So people are flying a little bit less. They're still flying, still down 70% year over year, but the numbers had improved. Point being, as we watch these trackers, it's critical that from an economic standpoint, as we go through the worst quarter of our lifetime, as we look back at Q2, when we look at numbers that are reminiscent of the Great Depression, to a degree at least, that's a big statement. The Great Depression had 60 million people in the workforce and 20 million of them were out of the workforce. So basically a fourth of the workforce was out of the workforce. Actually, a third of the workforce was out of the workforce. So when you think about those numbers, it really is catastrophic. And they were out for an extended period of time. The expectations here are, yes, we have just about, depending on which math you believe, because it is a little bit of different ways to look at the unemployment market. If you count everybody who's not counted, undercounted, not even employed, that number is probably closer to 20 million, maybe even 25 million, which would represent about 10% of our marketplace. So when you think about where we are from an unemployment standpoint, we're a consumer-based economy. And in a consumer-based economy, what you have to know is 70% of our economy is driven by us, how much we all spend. And we began to spend a bit better in the month of June, towards the end of June and July. Now, here's a critical point. Even though we have so many people unemployed, what you have to remember is the bulk of the U.S. population, believe it or not, going into this environment was in pretty good shape. We have the lowest levels of consumer debt since the 1980s. 80% of the country's wealth is for people over the age of 65. The people who are the core of our workforce, 25 to 54, were gainfully employed. We saw growth in wages in every sector, including actually people without a college degree had a 5.4% wage growth versus those with a college degree have 2.4. So it was really pretty impressive where we were, which is very relevant to where we are now, because first it was a round of stimulus checks. Then there was $600 in additional money per week paid for people on the unemployment line. In fact, the CBO, Congressional Budget Office, came out and said 83% of the people who took the unemployment benefits earned more on the unemployment line than they did while they were working. So what the Federal Reserve did and what the federal government did is create enough pent-up demand to keep people flush with cash so that if we can find a bridge to the other side of the virus, we should be able to get back to spending relatively quickly. And that's what happened in June. And suddenly the second wave started to happen. So now we're at a bit of an inflection point, a bit of a tug of war. The economic data is terrible. As I mentioned earlier, negative 40% GDP, negative 40% earnings growth. And when we look at the projections down the road, they're expected to be plus 25% GDP growth for the third quarter, plus 15 for the fourth quarter, plus 20 to 25% earnings growth. But that's going to require an economy that's open. And in fairness, the bulk of the United States is still very open. The spiking cases, some of the stuff is kind of silly. Vermont made the list of spiking cases. They went from 7 new cases on average on a trailing 7-day basis at 7 new cases per day. That number spiked to 21. Okay, absolutely. It's a 200% increase in the state of Vermont, but it's still 21 people. There's 1 million people who live in Vermont. So I know you got to be somewhat objective in the data. Where we have real significant problems like a Florida, like Arizona, like Texas, like California, although California has, maybe if you're interested, I'll show you later, lots of room available in their hospitals. They do not have an ICU bed issue. It's going to come down to, can we open up the economy fast enough? And that second point of it, to Evan's point, can we have a vaccine that's going to allow us to open up economically? Because it's critical here that in the next few weeks here, we're going to get consumer confidence is going to come out. When you all are confident, when we all are confident, we spend more. When we're gainfully employed, don't have a lot of debt, remember, you have the lowest interest rates of your lifetime. You can go out and get a 30-year mortgage today than any time in U.S. lower today than any time in U.S. history. If you're gainfully employed right now, inflation is nowhere. You're paying less at the pump. Your house is actually probably worth more right now than it was a year ago. One of the key things about consumer balance sheets is the consumer has held on to the valuation of their house. We're seeing new homes being built again. We're seeing existing homes price up. That is a critical piece, because when the most valuable piece of your life is worth more or the same than it was a year ago, you're a little less, you let us worry. You're more confident. You're more likely to spend a bit more. So economics are a bit unusual right now, because traditional economic data that we use, looking at valuations on the S&P 500, the stock market's not cheap. The stock market has become disconnected from the overall economy. We watch the stock market roaring and the whole economy is falling apart, barely holding on. How is that even possible? It's because of that pent-up demand, what the Federal Reserve did in creating $3 trillion of excess lending to get things going again, what the federal government did, the fact that we do have low rates and a strong consumer going into that. There's this expectation of the stock market that science is going to win and we'll be back to growth here fairly soon. And that's the million-dollar question. In all of this, can science win? And can we have enough common sense that when you're in a room, not outdoors. Outdoors, you are 10 times less likely to get this if you're outdoors. If you're in a room, and by the way, restaurants as of right now, because they're keeping low capacities, are showing that that's really not a way for you to get it either. But as long as you're wearing a mask and you're in a room that's crowded, and you cannot socially distance, be further than 6 feet away from somebody, that's how you get the virus. You're not getting it from touching surfaces. You're not getting it from going for a jog and aerosolizing it. You're not getting it from walking around outside. You're getting it from being enclosed indoors. By the way, air conditioning, it's ironic that there was a study at JP Morgan that's trying to research that much of this indoor issue is because of circulation of air conditioning. And then you see Honeywell come out with 3 different products that'll put an ultraviolet light into an AC system to kill the virus as it gets circulated through. They're doing the same thing on planes. But can we be smart enough to wear a mask in an environment where we know we can get the virus, which is when you're in an environment that where you can't be socially distant and someone's aerosolizing the virus. That's the hardest part about this. Now, I didn't mention therapeutics before, but therapeutics for me are probably the most exciting part about this. Eli Lilly, Regeneron, and a host of other companies. One of them's already out there. If you haven't heard of the drug called Remdesivir by Gilead, they just a few weeks ago showed that 68% of the people that take their drug when they're in the hospital and in ICU they will not die. The fatality rate will fall significantly. They take the matter of days in the hospital and down from 15 days down to 5 or 10. So if we already have one antiviral that's working and working actually quite well, add to that there's the steroid that's been around forever that's also proven to work effectively well called, I always get this name wrong, forgive me, the dexamethasone. It's steroid that helps bring inflammation down in your lungs. If you can get the lungs to breathe, and people tend to recover more quickly. So that's the other part of the narrative, that we now have, to a degree, there's some shortages, but drugs available that can help in that scenario. And then obviously procedures. We're knowing that intubation isn't always the best way to go anymore. There's other therapeutics that they're doing that aren't working. But we have a few therapeutics coming to market, and my favorite is Regeneron, that you'll take a pill, and in 48 hours, that pill will give you enough antibodies to fight the virus and get you out of the hospital. It's critical, because now we're able to open up without having pressure on hospitals. So now we can really focus on economic data if that happens. So therein lies this quandary for someone like me, that I, to a degree, have to navigate the stock market and the bond market in a way we've never done it before. We're doing it with data that's really unknown. I mean, when JP Morgan, Goldman Sachs, Morgan Stanley all came out and put billions of dollars in cash reserves on the sideline, expecting to have loan losses in excess of maybe $100 billion. That means you're talking 60,000 companies, small companies, could go default in the next year to 2 years because they can't get out of this. So the economic impact could be profound, and yet the stock market's roaring. It's roaring because it's a forecasting mechanism, trying to look out anywhere from 12 to 24 months and realizing that this is a temporary situation. And it's temporary because of what science is doing, what we can do to manage it, like Europe already has done, and more importantly, the work that the federal government and the Federal Reserve have done to stimulate the economy to hold us on. So that's a big opening salvo. I do think you ought to be somewhat careful. You know, you're lucky that you're working with the guys from Fred Stern and Vladem, Paul, and Evan. You know, these are phenomenal financial advisors. They're Luana Corral's an old friend of mine. You got really, really wonderful people here.